Tokenized real-world assets, or RWAs, are one of the leading crypto narratives this cycle. And one category of RWA is gaining rapid momentum: tokenized stocks. You can now trade shares of major companies like Nvidia, JPMorgan, Walmart, and hundreds more directly on crypto blockchains 24/7. In many cases, these tokenized stocks are available without KYC requirements, and you can even hold them directly in your crypto wallet. That's why today we'll cover everything you need to know about tokenized stocks, including what they are, where to find them, and the risks to keep in mind before you click that buy button. My name is Guy. Stay tuned. Before we begin, you need to know that I'm not a financial advisor, and nothing in this video should be considered financial or investment advice. This is simply intended to inform you about tokenized stocks. And if you want more content like this, fire up those like and subscribe buttons and decimate that notification bell so you don't miss our next video. Now, let's begin by explaining what tokenized stocks are and what makes them different from normal stocks. Well, as the name suggests, tokenized stocks are crypto tokens that represent actual stocks in the traditional market. Tokenized stocks give you exposure to stocks like Apple or Tesla on crypto blockchains without having to go through a traditional broker. In most cases, one token represents one company share, and the token's price mirrors the price of the share it represents. However, it is important to note right off the bat that most tokenized stocks do not represent a claim on the underlying asset. In other words, you can't actually redeem them for real shares. This is a big deal for reasons we'll come back to later in the video. Anyway, to offer tokenized stocks, the issuer needs to go through a few steps. First, they need to receive the appropriate licenses to offer these assets. Once licensed, the issuer buys shares from the stock market, which are then kept with a regulated custodian. The custodian plays a vital role, providing regular audits and proof of reserves while adhering to regional securities laws. The issuer then mints an equal number of tokens relative to the number of shares secured by the custodian and puts them on crypto blockchains. These tokens track the price of real stocks through market mechanisms and arbitrage opportunities which are outside the scope of this video. All you need to know is that there are three parties behind tokenized stocks: issuers, which mint and redeem the tokenized stock, custodians, which hold the stock underlying the token, and market makers, which ensure the tokenized stock reflects the value of the actual stock. This type of tokenized stock is called an equity-backed tokenized stock, but there is also a second variant called a synthetic tokenized stock. Now, synthetic tokenized stocks are less popular since they're not actually backed by real stocks. Instead, they track stock prices using smart contracts and oracles, which naturally makes them a bit more prone to risk. As such, equity-backed tokens are considered the gold standard, so be sure to keep an eye out for those. But why would anyone choose tokenized stocks over the real thing? After all, the stock market has been doing just fine for all these years, so surely putting stocks on the blockchain is just a gimmick, right? Well, no. Tokenized stocks actually let you do a few things that you can't do with normal stocks. You see, one of the beauties of crypto is that it trades 24/7, and anyone with an internet connection can get involved. There are almost no geographical restrictions, no minimum capital requirements, and, in many cases, no need to complete KYC. The same can't be said for the legacy stock market, which requires you to upload personal information and only trades between 9:30 a.m. and 4 p.m. Monday to Friday. Tokenized stocks also enable fractionalization, which isn't always possible in the traditional stock market. So you can buy part of a share instead of having to buy the whole thing, which makes investing more accessible because sometimes a single share can cost hundreds or even thousands of dollars. And unlike buying traditional stocks, which can take hours or even days to settle, tokenized stocks can be traded on-chain in seconds. They're also not tied down to an individual platform. They can be transferred anywhere in the world, sent to a centralized or decentralized exchange, used in DeFi protocols, or even parked in a self-custodial wallet, giving you much greater ownership and flexibility. Now, it's worth noting that only a handful of providers currently issue tokenized stocks, but many of these tokens exist on multiple chains. For example, Backed Finance, one of the leading providers, offers tokens called X stocks, which trade on Solana, BNB Chain, Tron, and Ethereum. Other notable providers include Ondo Finance, which recently collaborated with Trust Wallet to roll out tokenized stocks and ETFs. Then there's Denari, which offers D shares on Solana, Ethereum, Base, Arbitrum, and Plume. And of course, there's also now Robinhood, which offers more than 200 tokenized stocks and ETFs on Arbitrum, with plans to migrate all of these to its own bespoke blockchain in the near future. And this is just the beginning. Many other big players are also racing to get involved in the hopes of capturing market share. A notable example here is Coinbase, which filed with the SEC to offer tokenized stocks back in June and could be getting approval for this at any moment. Okay, now that you understand tokenized stocks, let's look at how to actually buy them. One crypto exchange that supports tokenized stocks is BitGet, where we have a massive bonus if you sign up for an account through our exclusive deals page. Not only will this give you a bonus of up to $50,000 in USDT, but you can also grab a free trial of Get Agent, BitGet's AI trading assistant. Pretty sweet. So to do this, click the link to the Coin Bureau BitGet deal in the description below, or simply scan the QR code on screen now. This will take you to our exclusive deal where you'll see this Sign Up Now button. Go ahead and hit that. You'll then be able to register for an account, and you should see our exclusive referral code automatically applied. Sign up with an email or a phone number, agree to the T's and C's, and click Create Account. Then simply follow all the on-screen instructions and you'll have an account in no time. Once you've set up a BitGet account, you can find X stock tokens on the platform in the same way you'd find any other crypto coin or token. So, let's use tokenized Apple stock as an example here. You should see the X stock alternative by typing in the normal stock market ticker, and the tokenized version will appear with an X at the end. So, in this case, the ticker is AAPLX. From here, you can trade X stocks against USDT like you would normally with any other crypto token. And of course, there are plenty of other tokenized stocks you can choose from too. In fact, as I record this, BitGet lists 103 different tokenized stocks, including X stocks from Backed Finance, as well as tokenized stocks from Ondo, and even tokenized shares of pre-ICO companies called pre-stocks. Whichever tokenized stock you choose to buy, you should see it appear in your BitGet account. And from here, we recommend that you withdraw your tokenized stock to a wallet that you control. To do this, simply hit the withdraw button, select the stock token you want to move, enter the amount you want to withdraw, and enter your wallet address. Be sure to check that all the details and the network definitely match, and then confirm the withdrawal. Now, we should point out that there are plenty of other centralized exchanges out there that you can use to scoop up tokenized stocks. If you're looking to buy X stocks, then you can easily find supporting exchanges on the X stocks website. We'll leave a link to that in the description. Currently, though, you can find X stocks on Kraken, Bybit, Gate, OKX, BitGet, LBank, Valar, and KuCoin. You'll also find a huge range of tokenized stocks on Ondo, which, as we mentioned earlier, recently announced the launch of tokenized stocks and ETFs in collaboration with Trust Wallet. You can also find Denari's D shares on platforms like Gemini, and if you're in the EU, you can find a massive selection of tokenized US stocks on Robinhood. Okay, that's centralized exchanges covered, but what if you prefer to go down the decentralized route instead? Well, the good news is that not only is this possible, but it's also very easy. That's because there are a plethora of decentralized platforms you can use to grab yourself some tokenized stocks. These platforms include decentralized exchanges such as Uniswap, PancakeSwap, SushiSwap, CowSwap, and no doubt plenty of others with the word swap at the end. And if connecting to a DEX isn't your thing, you can easily buy tokenized stocks directly from a mobile wallet, including Trust Wallet, Phantom, MetaMask, and Coinbase Wallet, to name a few. So, let's go through how to find tokenized stocks on a decentralized platform, starting with a DEX. We'll be using Uniswap for this example, but the process is pretty much the same whichever DEX you choose. The first thing you'll want to do is to get the official contract address for the tokenized stock you're interested in. Sure, you could just search for the stock in Uniswap itself, but if someone has created a scam token with the same name, then you run the risk of buying the wrong one. Better safe than sorry. So, to avoid this, head to the official website for the token issuer itself. For example, you can check out the site for backed finance, where you'll see a portal to xstocks.com. On the website, you should see a full list of available tokenized stocks, along with the official contract address for each one. Copy the address that's relevant to the chain you're using. In our case, we're using Uniswap, so we want the Ethereum address. Then, in Uniswap, click the drop-down button that says Select Token, and then paste the contract address into the search bar. Then you can simply connect your wallet, swap an amount of existing crypto from that wallet, and the stock token will appear in your wallet automatically. While this is all incredibly simple, you could make it even simpler by trading tokenized stocks directly in your wallet, as noted a moment ago. Thanks to the collaboration with Ondo and 1inch that I mentioned earlier, you can now trade stock tokens directly within Trust Wallet. To do this, simply open up the Trust Wallet app and click the Swap button at the bottom of the page. You'll notice that BNB chain will be selected by default, and that's because Trust Wallet is owned by Binance co-founder Changpeng Zhao, aka CZ, in case you didn't know. For now though, Trust Wallet supports tokenized stocks on Ethereum only, with planned support for other chains in the future. You can simply select the From and To networks and change them both to Ethereum. From here, follow the same steps as before. Go to the provider's website, copy the Ethereum address for the stock you want to buy. Then, back in the Trust Wallet app, click to select the tokenized stock you want to buy and paste the address in the search bar at the top. Enter the amount of crypto you want to spend, or the amount of stock tokens you want to buy, and then click Swap to confirm. Or, if you'd rather use Solana, then the Phantom Wallet is a great alternative with very similar steps. You have two options here, the Swap or the Search button, both at the bottom of the screen. If you hit the Swap button, you can do the same thing here as before. Select the crypto you want to trade and then paste the Solana address for the stock token you want to buy. Alternatively, you can hit the Search button and paste the address into the search bar. You should then see the stock token appear. Hit the big Buy button. Then select the crypto you want to spend, enter the amount, and confirm. So then, by this point, you'll have already bought yourself some tokenized stock. But what now? Do you just hodl them long term and watch as they appreciate in value? Well, as we've already covered, one of the advantages of tokenized stocks is that you can store them directly in your own custodial wallet. So if your plan is to simply hold, then this is easily done. But that's not the only thing you can do with them. You can take advantage of crypto's 24-hour nature to trade your tokenized Tesla, McDonald's, or Berkshire Hathaway shares at 2 a.m. on a Sunday, and you won't need to wait for the stock market to reopen on Monday for your trades to be settled. It's worth reiterating, though, that tokenized stocks don't grant the holder any voting rights, or any rights at all for that matter. In some cases, you can earn dividends, but this will depend on the platform, the structure of the token and its underlying asset, and the jurisdictions they're being offered in. If the real-world stock pays dividends, for example, Microsoft or Coca-Cola, then platforms will typically pass these dividends on to token holders through a variety of methods. These include direct payouts, sometimes in cash, but usually in USDC. Other platforms will automatically reinvest dividends to purchase additional shares, boosting the total tokens being held. Aside from buying, selling, and storing your tokenized stocks, though, there are other ways that you can use them to boost your potential gains. That's because you can lend them out through various DeFi lending protocols such as Morpho, Camino, and Blockstreet. So, rather than having your tokens sit idle in your wallet, this method allows you to earn a yield along the way. And of course, you can simply withdraw them whenever you want access to this liquidity again. And not only that, but some of these platforms let you use your tokenized stocks as collateral to borrow stablecoins, which you can then invest elsewhere. And that reminds me, you could also provide your tokenized stocks to liquidity pools on platforms like Radium or Uniswap and earn additional rewards. So, for example, you could provide USDT and tokenized shares of Amazon to a liquidity pool and then earn trading fees for that pair. And when you consider all the benefits of tokenized stocks, you quickly realize that they could provide the very rails that the legacy stock market so desperately needs. To refresh your memory, tokenized stocks offer faster finality, borderless participation, fractional ownership, DeFi composability, and, not to mention, a growing number of issuers and protocols scrambling to get involved. Now then, by this point, you'll know that tokenized stocks are incredibly bullish for crypto. But, much like anything else in crypto, tokenized stocks also come with their own disadvantages and risks. The big one here is regulatory uncertainty. That's because regulatory bodies in the US and elsewhere have yet to provide clear regulatory frameworks regarding the classification, rights, and oversight of tokenized stocks. That said, though, things are heading in the right direction, and clear regulations appear to be imminent, which is probably why we're seeing so many tokenized stocks launch in recent weeks. Not only has crypto's regulatory backdrop improved dramatically in recent months, but the Senate recently added a provision to its crypto market structure bill that would facilitate tokenized stocks, which, by the way, has been dubbed as, quote, the Responsible Financial Innovation Act of 2025. Basically, the provision confirms that tokenized stocks are to be regulated as securities, like their traditional counterparts. This is a big deal, as it helps to avoid any confusion about whether they're classed as commodities, while also allowing them to stay compatible with broker-dealer frameworks, clearing systems, and trading platforms. Now, the second challenge that tokenized stocks face is one we mentioned earlier, and that's that they don't offer a holder the same rights as traditional stocks. While some tokens will allow the holder to earn dividends, they typically don't give the holder any voting rights or other shareholder privileges. Instead, you forfeit any governance rights, meaning you won't have any input on company proposals. And this relates to the third challenge tokenized stocks face, which is their integration with existing financial systems. In most cases, tokenized stocks cannot be redeemed for actual shares, which will likely put off many investors. Moreover, making tokenized stocks compatible with traditional systems would require issuers to develop complex and likely expensive systems to enable communication between the two. The fourth challenge is counterparty risk, and that's simply because tokenized stocks rely on multiple counterparties. Custodians need to balance regulatory compliance while ensuring that all assets are kept safe and secure. Meanwhile, issuers need to precisely maintain a 1-to-1 ratio with the help of market makers, or else tokenized stocks will deviate from the real thing. And this ties into the fifth challenge, which, believe it or not, is their use in DeFi. This might seem counterintuitive, but the reason is straightforward. Tokenized stocks continue to suffer from low liquidity, despite their growing popularity. This makes them hypersensitive to price fluctuations, and when combined with DeFi protocols that enable leverage, even modest trades can have an outsized impact on prices. And without any real redemption mechanisms to swap tokens back into the underlying shares, arbitrage opportunities are limited, meaning prices can easily decouple from the real stocks they represent in the short term. Now, to be clear, this wouldn't affect the stock price of the underlying asset, but it could make their tokenized versions a much less viable option. That said, though, tokenized stocks are quickly gaining traction, and with major projects and institutions scrambling to integrate them into their business models, this liquidity is bound to grow rapidly over the coming weeks and months. And once that happens, there's no doubt in our minds that tokenized stocks will become one of the most significant developments in both crypto and traditional financial markets. What a time to be alive. Okay, if you found this video useful, smash those like and subscribe buttons to show it a bit of love. If you want to learn more about the stablecoin laws that were recently passed in the US, then check out the video right over here. And if you want to see our comparison between Robinhood and Coinbase, then check out the video right over here. Okay, thank you all so much for watching, and I'll see you again before you know it. This is Guy, signing off.